The Brazil real is headed for the worst month since November, but our next guest says he likes this currency because of the attractive yield. Alessio de Longis is a portfolio manager over at Oppenheimer Funds. Alessio, good to have you here on Taking Stock.
Pleasure to be here, Carol.
So the real, not a great month, but you like it.
Yes, we like it, but we like it for precisely the reason you just mentioned. We acknowledge that the local authorities are back on the headlines, determined to resist currency appreciation. If you remember from last year, Guido Mantega, the finance minister of Brazil, he was the pioneer of the concept of currency wars. Well, Brazil is still there on the headlines, making a case to resist excessive currency appreciation. They have increased the level of taxation on foreign investors. They continue to add little tweaks to resist excessive foreign capital inflows. So that is information that we have to take very seriously. So it's fair to say that we do not expect additional currency appreciation from the Brazilian real, but at the same time, we think a level of yields as a currency of 8–9%, and if you're a bond investor, even higher yields.
That's pretty attractive.
It's attractive to, you have a lot of cushion to sit and wait for the currency to remain stable. So at 180, we are in what we believe it's the middle of a comfort zone for the Brazilian central bank.
As long as the actions follow the words, correct?
And the price action has already followed the words, and the actions have followed because the taxation will be implemented. So, but the key question here is that Brazil, contrary to some other emerging markets, does not receive much hot portfolio fast money, but its strength relies mainly on sticky and long-term foreign direct investment, which would allow the currency to remain fairly stable.
So as an investor, that's the kind of momentum or flow you want to see.
Flow.
In general, Alessio, you like the emerging market currencies, correct?
Absolutely. In our shop, we are still very, very convinced on the long-term emerging market story, also expressed through their currencies.
All of them? You mentioned the real, but what else?
Not all of them, but selectively. I think this year is going to be much more a nuanced, tactical relative value play among emerging markets as well as developed market currencies. A similar story, well, because we are in the theme of excessive policy easing in the developed markets, which emerging markets fear tremendously. We have had a important run in currency appreciation across the globe, especially in emerging market currencies. It's reasonable to expect a more range-bound price action in most cases, where you can collect, with hopefully a relatively low level of volatility, you can collect very attractive yields. A similar story to Brazil would be the Colombian peso. Just this week, the Colombian authorities and the Colombian media have manifested how the authorities are studying additional currency intervention measures or measures to resist currency appreciation.
Let me ask you about something. John Taylor, who's the founder of the currency hedge fund FX Concepts, he told our Margaret Brennan earlier today, he said that he is ending bets that commodity-based currencies will appreciate as slowing Asia growth damps metal prices, so currencies in Australia and South Africa. Do you share his view?
Actually, we do share a large part of that view. What's interesting about what you're bringing up is exactly that we don't necessarily see the Brazilian real or the Colombian peso as outright bets against the US dollar. We actually are expressing bearish views through other commodity-linked currencies, exactly Australia. For the first time, I would say since 2008, we have a bearish view on the Australian dollar, which we exactly express to offset the risks of being wrong in other commodity currencies.
All right, but definitely the emerging market area is what you're looking at.
Correct.
All right, going to leave it there. Alessio, thank you so much. We appreciate it.
Thank you for having me.
All right, talking currencies here.